I'm pretty sure there was a lot of people happy that I fell flat on my arse.
If you're robbing Peter to pay Paul and waking up at 3 a.m. with a cold sweat, this is the conversation for you.
Do you know, probably the best decision, I value my peace more than I value my profit.
Hi guys, today we've got Chris Worden in from Director First. Director First is a company that looks after directors when they're going through some sort of distress or insolvency event, protects them and advises them, not the creditors or the company, on what options are available. Chris has been through that process before. 10 years ago, he had his own problems, which speared into the future at the exact point he's at today. So we're going to look at where he's at, what he's done, how he advises clients, and what options are really on the table if you're struggling. Let's jump in. Chris, you describe yourself as a bald-headed guy with specs, and you're not an IP. What's the distinction there?
Well, I lost my hair at about 16, and I used to have a patch as a kid, you know, like the NHS patches,
Yep.
And it's just got worse since there, really. But no, the IP distinction. So my job is advisory. I advise directors around insolvency issues. And that can be a whole range of problems that they face. It could be HMRC, some creditor pressure, considering taking more loans that they don't really know how to get from A to B. Now, my focus is the director, and that's the unique part. Most people in my industry, most of my colleagues, they will start working in insolvency and they eventually go, you know what, I want to be an insolvency practitioner, and they take an exam that's apparently is really hard to pass.
Yeah.
And they become an IP. And an insolvency practitioner is there to advise a company, so the corporate body, but not there for the director, okay? Don't get me wrong, there are some, like any industry, some really good people that are really, really helpful, but most directors don't understand that nuance.
Yeah.
And that's what I started to do many moons ago, and I've no idea how I've got here today, but, you know, we're the largest at what we do in the UK, #1 rated on Trustpilot, you know, really thousands of happy customers over the years, and we just believe in no-nonsense advice, really.
Cool. So take us back 10 years. The reason you got into this was because you were in the position that those directors are in. Can you talk us through that story?
Yeah, of course. It was just before Christmas, and the government had changed the goalposts on this scheme that we were working on. It was renewable energy.
Okay.
And we've been going for a few years. We had a nice little business, and eventually, basically overnight, they said they changed some policy, which meant the customers, we would have an order book of about 3 or 4 months' work, but the people that we'd signed up and we'd take deposits for, they would not get the payback that they thought they were going to get.
Okay.
So we rang them up, we told them we lost 50 grand in deposits because they just didn't want to go ahead, but we lost all our order book. And it was like, right, we don't want to do it. And we'd have survived that. What we then found at my first ever introduction to insolvency was a firm that owed us a lot of money went into liquidation, and obviously we're unsecured creditors. We didn't get a shekel back. So that was before Christmas, really. And I've always thought I was quite a streetwise person. You know, I'm not an idiot.
Yeah.
But this world, like I was on the internet, I thought, I'll figure this out. I'll figure everything out. So I'm on the internet and I'm making the odd call and I'm trying to glean information off these insolvency professionals. I went to see a few of them, so I'm sat down with them. And it was just so confusing. You know, the information that I was given was very contradictory.
Yeah.
When I was asking a direct question, I never got a direct answer. And most importantly, like I was made to feel like a naughty schoolboy. You know, I was made to, I was low.
Like you'd done something wrong, like it was all your fault.
It was all my fault. It was, you know, I felt like I'm being questioned by the police, you know, and it were a really tough time for me mentally, you know what I mean? Like I was, nobody catched me when I fell. You know what I mean? I'd whatever I'd done in my life, I'd worked really, really hard. And I had young children, and like I wasn't a bad guy. You know, I hadn't done anything wrong.
Yeah, you hadn't robbed anyone. You hadn't not paid anyone. It's just circumstances had caused
Absolutely.
it.
And like I was going into these meetings anxious. It was just really bad. It was just a bad bedside manner, you know, like, and I'd come out and I'd sort of think, I'll figure this out still. And in the day, I remember like, because all the big firms let everyone go immediately. And like I was into personal development at the time. I'm thinking, this is an opportunity.
Yeah.
Flipping well wasn't. It was naivety on my behalf. But I get home from work and like, that's when it would really start. I'm around the table with my family and I'm in my own head. You know what I mean? And for a guy who's read all this personal development, let me tell you, I catastrophize. I still do that now. So eventually went through an insolvency process. And even then, like I had a director's loan account that no one really told me about. And it was just a bad experience. But I sort of teamed up with this chap, and they call them work getters in the industry. That's what they were. And I sort of said to him and this lady, I said, listen, because I had a reasonable reputation, I like to think. I knew a lot of people in my area. I said, I'll get some work here. I said, I'll be able to get you some work here. And that was then. And like today, we do a heck of a lot of what we do.
Yeah.
You know, we've really, and the angle that I said is, if we just tell people everything, and we just tell them everything, I think they'll appreciate that. If we just answer questions with straight answers, you know, and then it's grown, and that's what we do today. We just.
So let's talk about director first, and you're kind of stepping in and helping the directors and just putting all the options on the table, really.
Yeah.
Without kind of being behind the scenes thinking, oh well, if we push them this way we'll get paid, or if we go like, how do you get paid? Are you getting paid by the directors, or
it depends from job to job. Okay. So what we will do is, you got to appreciate, we get hundreds of inquiries every month. Some of our inquiries might be for refinance, so we can put them in touch with the right people to get the right deals over the line. I mean, some jobs, directors, we will charge them a fee. You know, if we've got a heck of a lot of work to do.
But I guess then they're getting the straight answer then.
Yeah,
which you never got.
You don't pay it out of the company. You know, it's everything that we do is compliant. So, you know, we're assisting a director with a really large director's loan account settlement at the moment. And we're billing him for the time that we've spent on that. So a lot of our advice is absolutely free. We get an inquiry, we go, right, what's going on? What are the problems? Tell us what's going on in the business. Let's see your balance sheet. Let's see the latest profit and loss. Okay. What do you want to happen in an ideal world? You know, what's the best outcome for not just you, for creditors as well? Like, how do we get you from A to B legally? Yeah. But most importantly is, what is the problems here that are going to hit you as a director as a result of an insolvency? Because a lot of inquiries, there's no insolvency needed. It's like, we spoke about it off camera, talking to HMRC.
Yeah.
Negotiating time to pay arrangements. Sometimes it's just giving somebody the confidence to ring a creditor and say, I can't pay you this month, but I can do this and I can do that. And that's the whole model. It's not rocket science. It's giving people your time, giving them attention, and sharing our experience with them about what those options are.
Do you remember when kind of you went through that process? Was it insolvent day one, I'm going to go again, or was there a period of kind of grieving and loss?
It were really difficult because, like, for me, I'm from a little town, and I'm pretty sure there was a lot of people happy that I fell flat on my arse. So yeah, it was difficult.
How long did it take to go, right, this is what I'm going to do?
I would say it was probably a period of 3 months of trying to research, trying to figure things out, and then eventually realising that there's no way out of it. And I mean, I can speak to people for years before.
I think it's interesting you bounce back relatively quickly, because I think obviously we've done a lot of acquisitions which have been insolvent, and directors are kind of like, oh my God, there's no future, I'm going to lose everything. But the light at the end of the tunnel's not that far away, I think, for entrepreneurs. Like, if they knuckle down, they can bounce back quite quickly. It's just having the belief that the insolvency isn't going to kill them off.
I think the problem with a lot of insolvencies is that it's that fear and it's not knowing what's going to happen here. And again, that's a gap in the market that we fill, because a lot of people won't tell you what the consequences or how this is going to play out. It's very much, well, we'll deal with that down the line. So for me, I've always been quite entrepreneurial, and I've got a young family. Like I say, if I fall, nobody catches me. So I had to get moving very, very quickly.
Yeah.
And I think also that once you accept that's the route that you're going down, there's a saying I love, and it's acceptance is the answer to all my problems today. Because once I can accept something like that, I can move on. And when your brain has stopped firefighting, trying to fix a problem that isn't fixable, it gives it some space to go and run off and actually perhaps find another problem that might be worth solving, that you might be able to earn a few quid doing.
Yeah, 100%. So for those people that don't know insolvency, there's two types of insolvency. Do you want to talk me through kind of the balance sheet and cash flow side of it?
Yeah. So dead simple, cash flow test is, can you pay your debts on time? Okay. If you're in a time to pay arrangement with HMRC, it's a sign that you're cash flow insolvent. Okay. The balance sheet test is if you total up all the value of your assets, your stock, your machinery, your vehicles, money that's due in, is that more than what you owe? And if your assets are less than what you owe, you're also insolvent on a balance sheet test. Now, this is the bit that, an insolvency firm might ask you those two questions and you fail them and they're knocking your door down to try and get you to sign some notices. But I think you've got to look at, we'll call it the sunshine test. Is there any hope of this business making a recovery? Because you might be a construction business that's been knocked, okay? But you've got retentions due in 6 months that's going to plug a load of this hole of cash flow. You might be starting a big job, because the fact that you're insolvent on a balance sheet and a cash flow basis doesn't necessarily mean you have to go through an insolvency process. The question is can you realistically get back on your feet, And I'm not talking pie in the sky, with a strong wind. Is there a genuine, realistic proposition that you can get back on your feet, and you might need to go in and do some informal restructuring? But they're the two tests. And there's the legal action test as well, which is someone's got a CCJ against you, stat demand winding up petition. That's another test.
I guess it's important that you're not making the creditor's position worse at that point. So it's not just looking forward and going, can we improve it? But are we not going to make it worse at the same time?
Well, so again, it's an interesting point that you raise. So I was driving down here today, and there's a construction business that's in dire straits, and we're actually looking at, this company is going to go into administration. And there's a request is, can I pay this supplier bill? Okay. Now, by paying this supplier bill, the gear will get dropped on site, the job will be finished, and it's basically 15,000 that will return into the pot 65,000. So in that scenario, that you can do that because you're bringing more money into the pot. When you've become insolvent, you've got to be documenting all your rationale, really. Why? And this can be as simple, if you're a one-man band director, emailing yourself. Why are you continue to trade even though you are insolvent on those two tests? And it can be like, I've got this work coming in, I've got this retention coming in. And the more that you document, and you get advice as well. At that point, you'd speak to somebody like me and talk through those options. But I think people are rushed into insolvency, causes them problems. Obviously, racking up supplier debts, taking deposits from customers with no intention of paying, continually racking up HMRC debts, PAYE, VAT, with no intention of ever getting it paid, is going to put you in the firing line when the conduct's reported on.
I think that documenting is really key. Personal experience when we lost the golf club. the IP at that point came back probably 3, 4, 5 months after it went under, and then went, what was this transaction that you did 12 months ago? And I was like, I don't fucking know. It was a payment to such and such. Yeah, but why? I can't remember. Well, it's not a valid reason. So if people are struggling, like I've always said, they need to document it. Like I do a daily journal now, every day, and any payment we make that's over 10 grand, I'll just put a note on what it's for. Not because I'm insolvent, but more just because if anyone ever comes back and asks me, why did you do that at that point, and what was the logic behind it, I can just go, that's why. And trying to remember stuff, because people don't remember making one transaction in a bank account from 18 months ago. But when you go through that process, the IPs will look at the bank statements and they will check kind of what payments have been made and to who. And if you haven't got that documentation, it can cause all sorts of problems.
You're gonna, personal liability. And I imagine that played out in, it probably cost you more than you anticipated.
We argued about it for probably 12 months and eventually it cost me money, and I just put it back to kind of close it off. And I'd still argue it wasn't the right thing. I shouldn't have had to pay it. But, but
it's the stress, isn't it?
Yeah, it's the stress that goes with it. And do you know what? We probably paid the same amount in legal fees to defend it as we did to eventually just pay it back anyway.
Yeah.
So it would have been simpler and easier on day one to go, there's that cash
But you
back.
don't know what you don't know.
Yeah, you don't. If you don't know, and no one was there to advise me and tell me, and it was relatively early on in my acquisition journey. I mean, the golf club was probably the 3rd deal we ever did. So 27 through the line, I think I'm probably a lot more street savvy.
Not your first rodeo anymore.
But at that point in time, COVID's come in, there's no one to talk to. Business ownership's a hugely lonely place as it is. And you just go, I don't know. Of course I made that transaction. It was sensible 6 months ago. But,
Because people, like, when you don't understand the Insolvency Act, it's what you think's right. And that's another thing where directors get caught out is they're doing stuff that in their head is absolutely sound. It makes sense to them. Yeah. But it's from an insolvency point of view, has that had a detrimental effect to any of the creditors? And that's where people don't understand that their responsibilities change. The minute that you are failing them insolvency tests, your responsibilities now change, okay? You're not going to work to make money for you, your missus and your kids. You touched on it before. You're there to ensure that creditors' positions aren't made any worse. And if they are made any worse, I mean, the most high profile, there's very few cases where wrongful trading gets proved, but it was the BHS directors, wasn't it? They bought it for £1. It was proven that from that point they've made the positions worse, and we're talking like tens of millions of pounds that those directors have been pursued for. So it can be really serious.
Yeah, it can. The negative balance sheet is something that I come across quite a lot when I'm looking at businesses to buy, and I, having done enough insolvency stuff, can't work out why an accountant would ever allow someone to file negative accounts. Do you see that a lot in directors that you're speaking to?
So I think obviously they've got to file those accounts. It's a statutory requirement. So, I mean, I could talk about this sort of subject for a bit, and I'll try and sum it up quickly. Accountants, there's so many different types of accountants, Sean. I mean, you've got your compliance sausage machine accountants, and they serve a purpose. That's where you go in with your books and records, or you give them access to your online software, and they'll produce a set of accounts. That's what they do. Yeah, might cost you, I don't know, a couple of grand to do that a year. But people think that this accountant that you're paying 300 quid a month for should also be doing cash flows, profit and loss, reconcile. And they're not there for that. They're there for, and my view is those accounts are about as much use as a chocolate tea cozy. They're a snapshot of your business bloody 18 months ago, but people are making decisions running the business today. So it's more when you get in an accountant. I mean, I think everyone needs a good bookkeeper. Okay, I'm a big fan of bookkeepers. Somebody there on a monthly basis doing that reconciliation, producing, giving you a P&L on, you know.
Yeah, so you're looking at it on a monthly basis.
Yeah.
Actually make a decision.
Because your bookkeeper can help you spot that. Or if you get a little bit bigger, some type of fractional CFO, because that scares people to death. Well, I haven't got the money for a 100 grand for a finance director. Well, you can get an half decent fractional CFO for probably around £1,000 a month, £1,500 a month.
A couple of days a month.
And they're the people that you're spotting it early. Because most of us, me included, I like to see things that the glass half full, you know, and you really need someone next to you going, really someone who's really depressive next to you just to balance out your optimism,
It's tough. I think a lot of small businesses don't do management accounts. Like we see it all the time. Like we'll ask for accounts for someone we're looking to buy, and they'll send you them from last year.
When you say small, what do you mean a small business?
Sub 2 million.
That's not small, is it?
It's not small. It's a lot of money.
Yeah.
But like sub 2 million, they'll still be the director of the business will be doing the accounts, and they'll be busy and they won't get into it. So the invoicing's getting done, but the bank account's not getting reconciled. They're using the cash in the bank as the determination of whether they're doing well or not. So as long as the cash in the bank is okay, they feel okay. But
no provision for corporation tax.
You see it all the time.
Like for me, like that's the crazy. I'll get an inquiry, right? First thing is we're going to triage, right? What's really going on? So they're going to tell us what's going on, and we need to know. Right? Okay, well, send us age creditor list, send us P&L, send us that balance sheet, and you're right. They'll go, well, I haven't got anything.
It's not up to date.
Yeah,
sorry.
It's not up to date. I'm like, you're turning over £3 million a year, and then they'll send me something that's like, well, this says you've got 100 grand in bank. Well, I'm overdrawn by 20 hours, so I might as well go and wipe my arse on that. It's not, and that is I think that's one of the key reasons why people end up speaking to people like me is because they're scared of looking at it as well.
Gets overwhelming, I guess. Gets to a point where you're like, I don't know what to do. You're getting letters in the post constantly saying you owe this, you owe that, and you kind of stick your head in the sand.
And also, the likes of Sage and Xero, they say, well, like, this is idiot proof. It's not. Like, you need someone who knows what they're doing, because it's almost worse than having no system than having a system that someone's feeding the wrong information in. And I think there's fear there with people. It's like, I think any business needs to outsource that quickly. You could probably have bookkeeping done for £100 a month if there's only a few transactions, and it just gives you that. And I learned this the hard way. I don't mind sharing it, is I was always that guy, like, well, listen, revenue's there, costs are there, sound. And then what I would do is, I've got a head that plays terrible tricks on me. I'd wake up at a weekend, we're not doing as well as I think we're doing, and I will spend all weekend frightened to death that we're going to run out of money, that we're going to end up bust, and I've figured it out on these terrible spreadsheets. I'm, oh no, we're going to be all right. I've wasted another weekend with my kids. And I had to learn this the hard way, and I had to really learn to read what my balance sheet was and get anal about that profit and loss. And I want it on my desk on the 4th of the month at the very latest, and forcing yourself to look at it, the good, the bad, the ugly, and it helped me sleep better.
I don't think people can read accounts at all. And I probably look at a set of accounts every day at the moment, because that's how many opportunities we're looking at. And some of the biggest changes we've made in our business have come from looking at other people's accounts. Biggest example was we looked at a business down south that was insolvent, and they had £1 million worth of hardware on the balance sheet. And we were like, what's that? Oh, it's all the mobile phones. We put them on our balance sheet and we depreciate them over 3 years, so the customers don't own them, we own them, and we rent them to the customer. And I was like, that can't be right. So I went to our accountant and they were like, oh, you could do it that way. You obviously take the P&L hit on day one, just different ways of accounting. And I was like, well, what if all the routers that we buy in work, we spend 100 grand a year on hardware that we give to the customers for free to use the service. What if we put that on our balance sheet instead of taking the P&L hit? And they were like, wow, they just sat on the fence. So we went away and flowed it out both ways. And it literally tripled our profit that year by reaccounting for it. And if we hadn't have looked at that, we never bought that business, but if we hadn't have looked at that business to buy and gone through their accounts, we would never have then taken it back to ours. And I think business owners just, even if they do get a management report, they look at it and go, oh, well, that's our profit this month, done. And they don't delve enough into it unless they've got a CFO, unless they've got a bookkeeper going, this is gone down this month, this has gone up, why is our cost higher? Just interrogate it. And the two biggest reasons we see for the ones we've bought are either mismanagement or debt. They are literally the two reasons companies go under where we've bought them. And there's no middle ground. It's every time. But generally one leads into the other. They need cash, so they borrow. Then they borrow, and then they can't pay it.
And the borrowing blind as well, aren't they? Because
they've got old accounts, they've not got recent accounts, so they don't really know if they can afford it. And like Dovid Telecom that we bought in Feb last year, they borrowed 100,000 quid in the January, and it went under in the February.
Yeah.
Now,
and I imagine it was PG the 100 grand.
It was a PG on it for 100 grand. It was 10 grand a month repayment, so 120 grand getting paid back.
Yeah.
The broker took a £19,000 fee out of the 100 grand.
Wow.
So they only got 81,
Yeah.
paying 120 back. It paid the wages in the January, but no one ever at that point sat and going, well, are we going to pay the wages in Feb?
I see this all the time. And people they're so desperate to get out of a hole. And again, I think it sort of feeds into really bad advice. You know, I've worked with loads of brokers and some of them come back to you and go, well, we can get them this. I'm like, well, why on earth do you want to stick that into somebody? And the truth is because they'll get a big commission off it.
Yeah, fee out of it's massive, so why not?
And they're making decisions on the business, like up here, it's like, yeah, well, I need my wage. Sometimes taking a personally guaranteed debt on is a good idea. Okay, you know the difference between good debt and bad debt.
Yeah.
But people are taking these PG's debts on because we all know who's going to offer them you, right? You'll get
loads same lender every time, innit?
Loads of marketing that comes out, and it's because if it fails, and I'd love to know how many of these loans go into default, right? I mean, I know who's on my desk on 90% of cases, but they've turned. I mean, I had one the other week, and he's basically I think he got tricked into getting a VAT loan. You know, like, this business was never going to recover. He's got a £200,000 loan to pay the VAT, personally guaranteed. When he could have, and he's using a process anyway. He's going through that process. He should have done that 6 months ago and left the VAT in the company.
Yeah. So he didn't have a time to pay. He didn't owe it. He didn't PG it with HMRC because they don't generally. So he then went and borrowed the money to pay it back.
He'd had a number of failed time to pays.
Right,
yeah,
okay.
Just a bit of context.
So HMRC were kind of just like,
but there's no more deals getting done. But at that time, that was his only option. He's go, right, I'll get this VAT loan that'll sign a PG. And
it's where, I suppose, you come in, like, just being able to say, look, cash today might solve that immediate cash issue. You can pay the staff next week. But what happens next month? And that, I felt for the team there because, like, no one should have ever lent that money. Like, I can't believe that ever got signed off because I saw the accounts, like, and they never had management accounts. Like, when we did that deal, we had to get 6 months bank statements and then manually create a P&L from the bank statement.
Brilliant.
Because they couldn't give me a P&L. So we had to take a gut feel of actually where was it. But when you took all the debt repayments out, it wasn't a bad business. It was just struggling with debt. But no one should ever have lent that business 100 grand. But you're right, when there's a PG in place, they don't care.
I've got one this week, right? A guy, he's done really well, this lad, and he's brought on some investors, and there's basically £250,000 missing. That's what they're going to run out of money, and they're trying to force him now to take on 130 grand personally guaranteed debt. That does not even solve the problem. Okay, it buys them another 2 months, and it's like, you know, but who on it? They're lending it him because this guy he's got a chunk of equity at home. You know, it's it's dangerous.
Yeah, like my wife always said, like, the one thing you can't do is put the house on the line. And I don't mind PGs. Like, I'll go and sign a PG on a vehicle all day long. We need a new vehicle, PG, John. Like, you know, if I can't pay it, I go and sell the vehicle and you hope it pays the debt back off.
Yeah.
Relatively easy to deal with. Like, I don't know if there'd ever be a time in my career now where I go, oh yeah, no worries, 250 grand cash, PG, done. I just don't know if I'd ever take that risk.
I think it's because we've seen the bad side.
Because I've seen the bad side.
PTSD from all. I'm really cautious, because of what I see. You know, and I see a lot of businesses fail because they grow too quickly. They take on risk and it goes to shit. You know, I think there's a lot to be said to just go right. Play it. Some people say it's small thinking, but you know what? I want peace of mind.
Yeah, there's nothing wrong with having a decent business that makes a profit and you can go home every night stress-free and have dinner with your kids. Like, there's nothing wrong with that. But I think we're so drilled in with shit advice that you've got to go big. You've got to get that $1 billion unicorn. You've got to scale as quick as you can. Kind of don't.
I mean, what's your day-to-day then like? Because you are, you know, what you were telling me what you do off camera sounds really interesting.
So I've stepped back from the day-to-day operation of the business now. So I purely focus on acquisition. So speaking to insolvency practitioners every day, tracking, winding up petitions, notice of intention, which are all getting released. And there'll be days where I see those winding up petitions come in before the directors. So I'm sending them a message on LinkedIn going, see HMRC have issued a winding up petition. Can we have a conversation? And they don't even know they've had it yet. So doing all of that, once we get an acquisition done, I will then be in the trenches for 4 to 6 weeks, probably working 60, 70, 80 hours a week, because all of a sudden I've come into a business where the directors have probably left. The staff are all really stressed because it's gone through a process and there's now a big fat scouser running the business instead of what there was before, and everyone kind of panics in insolvency, they're going to lose their jobs. So you have to deal with all of that. Suppliers are all screaming, customers are all screaming, billing systems need changing, and so it's like 4 to 6 weeks of chaos, and then my life settles down again, and then we go again. And so I do all the exciting bits in the business, the acquisitions, the huge growth, and don't have to do the day-to-day nitty-gritty anymore. I suppose it's where every entrepreneur wants to get to, the non-operational stuff, you know, working on the business, not in it. But how many actually get there? I mean, it's taken me 13 years, 27 acquisitions to finally be able to go, I don't need to deal with that anymore, but it's taken years to get there. So yeah, my day-to-day is very much kind of just looking for opportunities, really. Not just in telco, but just looking in what the next acquisition might be. That's the bit I enjoy, and if it enjoys it, it's not work. So that's where my kind of head goes now, is what is that next opportunity, trying to work it out. And there'll be sometimes nothing happens, and then all of a sudden there'll be 5 opportunities come in at the same time. We had an opportunity yesterday for a telco doing 5 million in revenue. Well, to bolt that in would be transformational for us. I spend a lot of money on accountants. I'd quite like to buy an accountancy firm. So I looked at 2 last week that are going insolvent. Neither of them quite fitted what we wanted. So have a look, step back, move on again. I try and be clinical, you know, every professional services, so IP, the people that are advertising it are all busy people as well. Like, we will look at a deal and we'll know in an hour whether it's something we want to pursue or we just go, it's not for us. So we're kind of really aggressive with it. Like, I've been called a vulture before, but you know, if I can help an owner, like we did one in November where we paid £1 for it. So we made an offer on a pre-pack basis. It could have gone into pre-pack. But if it had gone into pre-pack, the owner would have got nothing for his 23 years of service. Like, he'd have literally just walked away and got nothing. And I was like, well, I think we can turn it round. Let me buy 90% for £1. And if we can get the profit to where we think we can, I'll pay you out over the next 4 years, kind of at the end of every year, depending on what the profit is, you'll get paid. So we had 2 options. It was do the IP and insolvency route, you'll get nothing. That's the route he was being pushed down. Or come and do it solvently and see what we can do. And he went away and watched a podcast that I did 18 months ago, decided I actually talked some sense, and came back on the Monday and went, you can have 90% for £1.
Brilliant.
So just kind of busy, but just looking for opportunities really is my day to day. So that's me. So let's go to the biggest issues we see in insolvency, which I would say was directors' loans.
Yeah.
It's the biggest thing that gets people caught out, and I think it doesn't even necessarily sit on the balance sheet for a long time because people take dividends or whatever, and then it gets converted. How are you seeing them build up over time?
Most directors' loan accounts are, not dumped in 1 year. They creep up. The £5,000 next year, the 20 grand the year after. Before you know it, they're at 100,000.
Yeah.
Or if someone needs to buy an house, the business has gone okay for a while. They want to make that big lump jump into a big house, and they need a bigger deposit. So at the time they take it out of the company. So I think most directors' loan accounts, they just creep up there. People they don't know what they are.
Yeah.
That's like the amount of people that I speak to don't know what a director's loan account is.
Just a line in their accounts, which goes back to people not being able to read their accounts.
And people say, "Oh, my accountant's never told me," but I don't quite believe that. I think any accountant will explain, listen, you need to be careful here. I think what they don't get told is the consequences of having a director's loan account, and whether you end up in an insolvency process or you don't, you're going to get absolutely hammered. S455 tax, was 33.75% on anything that's not paid back at 9 months after the year end.
Yeah.
That goes on your corporation tax. And okay, if you pay the loan back, you'll get that money back, but it's down.
You don't get it quickly.
No.
Like, again, one of the ones we looked at when we tried to do it solvently, we tried to structure the deal so we got that tax back, but they don't pay it back.
No.
It's like, we'll pay it back I can't remember exactly what it was, but it was like 12 months away from getting that money back. It wasn't a quick process.
You're losing out your cash flow.
Yeah, so all of a sudden, like 33% of it go in.
And obviously in an insolvency scenario, like, okay, you may make a really good point. Like, your balance sheet will see if you've got a DLA, okay? But lots of directors, and this is just the easiest numbers for this purpose, they're on £1,000 a month salary, £3,000 a month that they take as a dividend, okay? Now that's what we're told to do around,
Tax efficient.
Tax efficient, ideally, your missus, you're both on 50 grand a year, and that you keep your tax bill low. But that's only when you're making a profit. Now, if you are taking that £3,000 a month, okay, and then you're speaking to me or you're speaking to them and they're distressed and they've not paid last year's corporation tax bill, well, they've been cash flow insolvent since last year. So it's argued every £3,000 that you've taken since you can't pay HMRC, an insolvency practitioner is going to reclassify it and say, well, them dividends were illegal. We're going to come at you for an overdrawn loan account. Or worse still, you speak to somebody, they sort of know what a director's loan account is, and they go, yeah, mine's 60 grand. Okay, cool, where have you got that information from? Which my accounts that are 18 months out of date? How much have you been taking out of the business? I take about 10 grand a month, I think. And then they've got this massive issue because in insolvency, they're going to be asked to pay that back. And my issue is not with that. My issue is people don't get told about it, and they don't. And I have had some serious hate on LinkedIn. Like, people, I ended up having to block a few people because I'm just thinking I'm pissing in the wind with this person. But some firms do not mention this until you've appointed them.
Yeah.
Because once you've appointed them, you can't unappoint them. Now, I know within 30 seconds if this is a problem. Even if it's micro accounts on company's house, I can see, well, current assets is 100, and I've got to have that conversation with the director. And I once got accused, well, it might put them off putting it into liquidation. And I'm like, you know what? I've seen people kill themselves over stuff like this. This is fucking serious, you know what I mean? And I'm just a big believer. Listen, here is your shit sandwich. This is what the problem is, right? And now we know what these problems are. We can start to talk about how we're going to deal with them.
Yeah.
You're not going to dodge all the raindrops on this one, but at least they're... I mean, how bad would you feel? You think something's gone away for 5 to 10 grand, and then 3 months down the line, you're being demanded and you feel like you potentially could lose your house, It's not right.
Proper blindsided as well, because my experience of liquidation, and we've had, I think, 3 now, is it kind of goes quiet. You sign the documents, and then you don't really hear anything.
Anticlimax, isn't
Yeah,
it? That
nothing.
creditors meeting.
Like it happens and it's approved, and then that's it for a month or two. Every so often you'll get, can you send these documents in? Can you send a staff list? Can you send this or that? But nothing happens for months and months and months, and then all of a sudden, bang, you get a letter in the post that'll say, we think this or we think that. And you see it kind of time and time again, and you've advised against people going for IPs with really low fees. And is that really how they're making the money?
And again, like, let me tell you, so there's a paper out now to say that the minimum fee, I think it was R3, one of the government bodies, that they're saying that the minimum fee for liquidation should be £10,000 plus VAT.
Yeah.
Okay. It's not been brought in yet, but that's what they're saying when you consider getting credit approval, dealing with redundancies, £10,000 plus VAT. Now, most firms will sort of charge between 5 and 10 for a basic wrap up. And I think at £5,000 people lose money, but they might do 20 of them a month. It keeps
the wheels turning.
So how on earth can anyone do 1,500 quid plus VAT? How on earth can anyone do £2,000 plus VAT? And you're right, they're doing it. I can't tell you how many jobs I've lost from people, you know, like, because I'll come back to somebody. What if I had one? And it really annoys me, this, to be honest. I'll go to them, I'll say, listen, okay, yeah, they're going to charge £5,000 plus VAT. That's not the problem. It's not the problem, mate. Like, your problem, this director's loan account. I don't like asking these questions, but what's your personal situation? What's your house worth? What's the mortgage? Have you got personal debt? I'm like, this is a big problem. And I will sort of go away, and obviously this is all very much in principle because an IP can't make a decision until they've been appointed, but like I've done this job a long time, and I'll go back and I'll say, I think this is going to end up costing you about 60 grand. And they'll go, well, my accountant's put me into someone, it's going to be 5 grand. And they'll just ghost me then, right? And I'm like, okay, can't win them all. And then they'll sneak into my LinkedIn DMs, or they'll email me. I'm going to start
at 3 o'clock in the morning.
It like, Chris, I'm being pursued for 70 grand. I'm like, I fucking told you that 6 months ago. Can you help me? No, I can't help you.
Yeah, it's too late now.
Yeah, I've tried to help you, you know, and I don't know why people don't listen to me. I've got to go on my Trustpilot. A guy did a review the other day, bless him, and we got the job. He didn't have a lot of money, this guy, and this guy has got, he didn't really have anything, and we'd sort of spoken to one of the IPs and said, listen, obviously we'll have to do the investigation, but highly likely we will not make a recovery on this. So it was a £5,000 fee that they wanted. So this guy's gone with somebody who's cheaper, and I sort of get why he did it, because his arse, but he's been fucking hounded, man. He hasn't got anything, this guy.
Yeah.
So we've sort of helped him do a bankruptcy calculator, and that's what they've got to think about here, right? And he sent it to them, and they fucking left him alone, thank God, because an insolvency practitioner they've got the discretion to do a settlement. You've experienced it yourself with a preference payment, right? And their justification around this is this settlement a better realisation than bankruptcy, okay? People don't realise bankruptcy is expensive. It's expensive and risky. You know, let's say you've got an £500,000 house. Well, in a bankruptcy, it's probably worth, I don't know, 450, yeah, maybe a little bit less because it's a forced sale. You've got to sell it, you've got to conveyance it. Official receiver's going to take £6,000 plus VAT. Petitioning costs a couple of grand. A trustee in bankruptcy is going to come in and charge at least 15% of the realisations, right? And then you bury your head in the sand, there might be 20 grand's worth of legal costs, okay? So, and your missus or your husband who's nothing to do with the business, well, an IP can't attack their share of it. So then you've got, let's say that, I'll do a real life example. Let's say there's an £500,000 house and you've only got 200 grand's worth of mortgage. You're thinking, fuck, I've got 300 grand's worth of mortgage. I'm definitely going to have to pay all this 50 grand back. Well, half of it's your missus's, so yours is 150, okay? Well, it's probably going to cost them 60 to try and actually get you to bankruptcy, okay? So we are looking at 90 grand, right? Oh God, well, I'm definitely gonna have to pay it all back. Well, nobody wants to make someone bankrupt because could be 4 years down the line where they actually take possession of the house. So anything could happen in that 4 years. They could rehock the house up, take on loads of personal debt, bugger off to Dubai. And the insolvency practitioner's got to fund the action. They don't like that level of risk. And most directors will have also taken on personal guaranteed debt. So let's say in a bankruptcy, there's 50 grand coming into the pot. Well, that insolvency practitioner who's owed that amount of money is having a slice of that money along with funding circle, Iwaka capital on tack and self-assessment. So people just don't get that. They do not understand where they can play this. And it's exactly how you experienced it with the... Talk us through the preference pay.
Yeah, so I paid back internal lending to one of my other group companies like a month before, probably 2 months before the insolvency, but the insolvency we had was caused A, by COVID, and B, the landlord refused consent to assign the lease over to us. So, we didn't then have a right to be in. So it wasn't insolvent, we just couldn't trade for the premises.
You didn't know that at the time,
so I transferred it on the Sunday, and then we had the rejection of the consent to assign on the Monday.
Yeah.
Now, it looks shit. There's no doubt about it. Looks awful. But when I made that payment, I didn't know that the Monday was going to come and they were going to say no.
Yeah.
But of course, they don't care about that. They just go, well, you've paid it back to a connected party.
Do you not think they could have looked at the bank? This is what I'd have done, is just send me bank statements, and I'd have gone, John, what's happened there, mate?
Yeah.
And had that conversation and say, listen, it's done now, but that's the problem, pal. And if you can't pay it back, we're going to have a natter with it.
We had that conversation because on the 9th of March, they came into the office and before we put it under, and I went through and said, I made this payment back to here, and this was the logic of why I did it. Is that going to be all right? Oh yeah, don't worry about it. It's fine. Absolutely fine. But I can't prove it, but I'm still quite comfortable that when we did that, there was 40 grand in the bank. 40 grand for an IP, take the money, pay the creditors where you can, job done. I then made a decision which felt right for me and still feels right today, that I paid the staff in March.
Yeah.
It was COVID. COVID had just started. They were all, furlough wasn't there at that point. There was no furlough scheme. If there was, we'd probably have tried to carry on negotiating with the landlord and would have sorted it out. But furlough didn't exist in the March. I had no operation. I couldn't be in the premises because the landlord had refused. And so I did what was right and paid the staff, which was 25, 30 grand, which left 10 grand of cash in the bank. So of course, when they were appointed, there wasn't as much cash in as when we originally spoke. And it felt like they were just trying to get their fees paid. I can't prove that.
No, but you know what? That is outrageous.
Yeah.
Because you've asked the question, obviously you've not got it in writing.
No, because when I queried it, of course, they were like, no, we didn't discuss that. It's like, yes, we did. Yeah. But what can you do?
You can't. But you learned a lesson from that, didn't you? It's like, and you've obviously easily recovered from that one. But some people the lessons they're learning are life defining. They're losing. And again, I'm not here to show someone some black magic to get away from the responsibilities. I'm not here to do that. What I'm trying to educate people on here is you have got options and you need to be armed with these before you're making decisions.
Yeah.
And there are some good firms out there that will have that open and honest conversation on the basis it's all about you telling truth.
Yeah.
Because if once they get appointed and you've got that villa in Marbella you've not told anyone about, like the gloves are going to be off.
Yeah.
But yeah, it bothers me.
Yeah, it's just, you're right, it's one of those lessons, and I suppose it's part of my journey, but if that had an extra zero on the end, if it was 200 instead of 20, it's a completely different life moment. And as you said, as people build the director's loan up over time without really thinking about it, it's not that difficult to bang, it's a lot of money, and then it's kind of like catastrophic then.
Because once you've made an appointment, you can't unmake
it back.
Yeah, so it's like people think everyone in insolvencies are the same, right? It's like, and they should be. They actually should be, really, but and I don't want to go down that rabbit hole with people. They'll make their own mind up from this conversation.
Let's move on to bounce back loans then.
Okay, cool.
So
how are we still talking about bounce back loans in 2026?
And this is why, right? So in the last 3 months, there's been 181 directors disqualified.
Yeah.
Which didn't feel like a lot to me, but maybe it is. 10 so far this year. 7 out of those 10 are for bounce back loan fraud. If we look at December's stats, 59 directors were disqualified, 38 were for bounce back loan fraud. Most of them are the same, where it was your turnover wasn't enough. You falsely declared your turnover, you got 50 grand, you haven't paid it back. But the bans are pretty big, 10 years, 11 years. Are you seeing a lot of bounce back issues? Because I took Sybils and bounce backs, and we're now at 5 years. They've all kind of come to an end and been paid back.
Well, the problem all they've had is they've gone into insolvency.
Yeah.
Okay. And some. So do I deal with many bounce back loans? I don't. Because when someone's if you've still got a big bounce back loan in 2026, right? My guess is there's something not 100% right about it.
Yeah.
And either they've took it and they shouldn't have took. I mean, let's get into it. Who could take one? We had to be trading, okay? You could only take one at a time. The money that you took out needed to be used for the benefit of the business, and you was allowed to apply for 25% of your turnover in 2019. You could project your turnover if you was incorporated after the 1st of Jan 2019, right? So if you have done anything around bounce back loan fraud, okay, this is the advice. You pay the bloody thing back. And that might look like you ring the bank and offer them a £5 a month, okay?
Yeah.
Because if you have defaulted over 3 months, the bank have probably got the money back anyway.
Right.
They won't tell you that, okay, but they'll have made the claim on the guarantee. So they will accept any reasonable proposal, and it might be £1 a month, okay? It might be 10, whatever you can afford, right? Because and this is what I say to people who've done something wrong with it. And by the way, you have different people. You've done people who've been bang at it, right? I've no sympathy for them.
I don't
right?
have any sympathy either.
And you've got people who are decent people who have just made a mistake, right? Their arse was against the wall, and the advice is just pay it back. You know, and maybe that might take you 20 years to do it, because here's what I think is going to happen. In fact, there's papers out to back this up. There was like a last gasp scheme that was launched in December, and I forget what it was called. But basically, if you've done something wrong with your bounce back loan, it was your opportunity to go to the bank or the appointed debt collector and do a deal with them. And that deal could, again, go out over 10, 20 years. Or there's a thing called partial payment. So I know I've borrowed 50, business is over, I don't owe anyone else, it's just a bounce back loan. I'm willing to offer you 20 grand as full and final. And a lot of them will take that. It's all dependent on the situations. But if you are out there still in default with no deal set with a bank, expect the knock to happen. And if you've done something wrong, I mean, I think those figures are really low.
I thought they were quite low,
considering how many have been done. But I'm almost certain they're all down to people who've gone through an insolvency, because an insolvency practitioner has got to report bounce back loan fraud. It's really hot on their topics. So the message, you've got to pay it back.
Simpler, isn't it? Like your turnover was this, or you declared your turnover was this, and you borrowed this. If you go into insolvency, and then you send them their accounts, and the turnover wasn't that, it's literally black and white.
I don't think people. I mean, I've heard I always tell people, get more than one bit of advice.
Yeah.
Like even if I'm first person you speak to, so go and check us out against someone else. Give yourself a bit of something to compare to. And I'll have people that have come off and gone, well, I've been told 5 grand will wrap it up. I says, it'll liquidate the business. But you're definitely going to get disqualified if it gets picked up. You're definitely going to get made personally liable. And some cases you can't avoid it. You've still got to go into insolvency because you've got other creditor pressure, HMRC.
You've got to just deal with it.
But a lot of them, it's like, and touching on like the disqualifications, what I've seen as well, if you get that letter about being disqualified, you need to lawyer up. Because I believe if there's a robust argument for why you've done what you've done, the insolvency service will back off. I think they go for low hanging fruit, you know, people who'll just roll over.
Yeah.
Because sometimes there's a reason, right? There's a reason for why they've done what they've done. And yeah, you've got to get a solicitor on it quickly.
Yeah. In a weird way, like having looked at the research I was doing just to kind of get those stats, people that have done what I would class as quite naughty stuff, like, you know, they owe £1 million in VAT, have then got 4 years ban instead of 10, 11 years. And it kind of, I suppose, that low-hanging fruit, it's just an easy win for the insolvency service. We've done our job, they misdeclared it, bang, 10 years, take it or leave it.
And the public there's been outcry.
Yeah, the public have been told that no one's paid it back.
Yeah.
And I mean, I still go back to when we borrowed, and our NatWest account manager at the time just said, just pay it back. Don't matter what you spend it on. You want to go and buy a stupid car, go and buy a stupid car. Just make sure you pay it back. And I mean, it was never in writing, it was on the phone. But if you told that to every single one he lent the money to, like,
I think there was
crazy.
Nobody knew what was going on, did they?
No.
There was no real, I mean, it was an impossible situation, wasn't it? We all thought the world was going to end. People could apply for 50 grand that had never had 50 grand in the account.
At like 2% as well.
Bang, it was in your account. It's like, wow, you know?
Yeah.
So
it was, you filled I remember doing it, and you filled a form in and you just hit submit.
Yeah.
And then 2 days later,
bonkers. Yeah.
Like 2% interest as well. Like, it was so cheap. Like, why wouldn't you take the debt, I suppose? But like, if you can't pay it back,
I think those that are watching this and they've still owe 50 grand in balance back loan and they've not done anything,
they need to pay it back.
There's a good chance they've done something wrong with it. So get on the phone to that bank, get on the phone to the debt collector, and pay what you can over a period of time.
Sounds cool. Winding up petitions. Do people stick their heads in the sand, or do they wait for them?
Well,
need to get
I think the problem is now is like something that would take 12 months with HMRC is probably taking 6 months now. Like I've seen winders for 30 grand. You know, you go back a year or two ago, people wouldn't get wound up for 30,000 quid. Like they wouldn't knock on your door unless you owed them 100 grand. And so the HMRC's policies definitely changed here. Because they're the largest petitioner by a country mile, and I think it's just sped up. I think there's 2,500 more enforcement agents with HMRC. Systems are better now, and they've got to get some of this money. You know, there's tens of billions of pounds worth of debt that's owed in unpaid taxes.
Yeah.
Do people bury their head in the sand? So I speak to clients a lot, and it's like they've got big HMRC arrears, and you can't force someone to take your advice. Like nobody wants to go insolvent. Most people don't. It's the grim reaper, you know. It's over, and they will fight on, and they think they're doing this valiantly. And I'm like, listen, you are going to get wound up, okay? But I'm not hearing anything. Yeah, that's what I mean. They've stopped engaging with you, and then the petition lands, and it's a surprise.
Yeah.
So I think it's naivety sometimes with a lot of directors, because you know what, in the past they might have been in business a long time and they've gone, well, I've not paid HMRC for a year before. Times have changed. And that ostrich method, I just don't want to look at it. I
think the public perception of that debt is now, you know, we constantly hear the economy's struggling, debts are up, and people aren't paying those bills. And I think the government are now kind of ramping that pressure up with HMRC to be more aggressive, so they can say, oh, well, we've recovered all of this amount of money. And it does feel like they're being more aggressive. But equally, when I've dealt with them, they will do a deal. They'll not reduce it, but they will do time to pay. They will, if you're engaged with them and you don't lie to them and bullshit them and ignore them, if you actually pick up the phone, they'll try and support it. They're not winding up, especially from HMRC, is the last resort.
It is.
Like, and if you get to that point, it's either because you've ignored them, or you've put your head in your sand, or you've wound them up first. Like, if you engage properly, and you know, if you get that knock on the door, you sit down with them and go, well, look, this is where I'm at. Like, I think I can turn it around, but I need time to pay. I need some help. Most of them are quite willing.
I think that this is the maddest thing that I've continually advised people is, you know, if you get someone on the phone with a bit of an arsehole, ring back at another day, right? And at another time. And sometimes it's as simple as that.
Yeah.
which is, again, I really find my brain hard to compute, because they've got a framework they've got to work in. But you're right. I mean, I spoke to a guy. He did not want to put it through insolvency, this chap, and he owed about 40 grand to the HMRC. Business had stopped trading. He was just an honest bloke, nice guy. And I said to him, I said, well, go talk to them and just say to him, say, listen, I've spoken to this insolvency guy, I can wrap this up. He said, but I don't want to. He said, I'm willing to put into this company a bit of money every month to pay off. Got a 20-year one. I swear to God, he got a 20-year. Now, that will not happen to most people, okay? No. But it goes to show you can always get 12 months. I think you can always get 24 months. I think when you're going for 36 months and longer, you've got to show a little bit more. But if you go there with a cash flow and have an open and honest conversation, and the reason why you are where you are, you're going to get a lot of brownie points, as opposed to that one that waits for a winding up petition and then tries to deal with it and like, mate, you're past the post now. So I think HMRC is putting on more pressure than ever, John. Yeah.
We had the one of the ones we did last year, they owed HMRC £500,000 and equally the director's loan was £500,000. So it was quite easy to see where the cash had gone. Mm-hmm. And we were bought in before it went into insolvency, and I spoke to HMRC at that point, and she was not bothered. Like, she was so adamant it wasn't about the cash at that point. It was to stop them trading, because it was just getting worse and worse and worse. And then when you look back at the behaviour at the time and the way they approached it, they were so aggressive. Like, HMRC were, and the guy was just ignoring them, blaming them. It was all their fault. It was HMRC's fault that he hadn't paid the money, and you're like, you know, they just need to see recovery. They need to see it, and if you're not going to do it, eventually they're going to wind you up. And look, we bought that business out of administration, so it was great for us in the end. But like, it was probably the biggest director's loan I'd ever seen. Like, £500,000 was pretty juicy, and I mean, he ended up going bankrupt the week after the company went insolvent, so there was no recovery there. What's the biggest director's loan you've ever seen?
1.2 million. Yeah. 1.2 million.
Did it get paid?
A settlement
done.
Yeah.
It's a big chunk, that.
It's one of those where we earn our money. You know?
Was that built up over a long time?
Yeah. Over a long period of time, over about 10 years. Yeah. Bad advice, really. He was an old boy, and he had a lot of property, a lot of equity in his property, and
so he has to pay it at that point, or pay something.
Well, yeah,
he's going to lose.
But like, even then, you know, if there's a settlement that's made that's quick, you know, the old saying, a bird in the hand is worth two in the bush.
Yeah.
So we earned our money on that one, and he was happy. He was never going to do cartwheels down Covent Garden, but he were happy because, you know, it could have been a lot worse.
Yeah, I suppose I'd always say cash today is better than jam tomorrow. Like, and yes, they can go and fund litigation, but I don't really think most of them want to do that.
No, like I said, there's different ones. There's some that'll be really, listen, this is a problem. Some of them might really want to talk about it at the start, which kind of understandable, but most will want to go, this is a problem, you know, I want you to be aware of a problem. The really good ones will be, the really, really good ones, director first will go, come on, let's get everything out on the table. This is the potential scenario, and we will act as that conduit and get these deals done.
So you've advised them. What's the next step? So there's obviously pre-pack and liquidation, CVAs. What are the options? Do you want to talk about it?
So, yeah, if a business is insolvent, you've got, let's talk about the non-insolvency options. You know, it's going to creditors and setting essentially time to pay arrangements up.
Yeah.
Or pumping in more of your own capital. Again, before you do that, you've got to look at this business. Like, you've got to look at the numbers, not with rose-tinted glasses. Is that the right thing to do? Let's say there's a viable business in and amongst this, but it's got some severe cash flow difficulties, a lot of short-term pressure. A CVA is a really good tool, which essentially allows you to restructure your unsecured debts and pay them over a longer period of time. And a CVA is like it's quite a weighty document, and it's a story of how, if what's happened, what's going to happen, what's going to happen in the future. But the most important thing in a CVA is that comparison statement. if this business ends up in liquidation, you're going to get that much. If you go in and approve the CVA, because it needs 75% of creditors to approve, you'll get that much, okay? Really handy for certain businesses, certain industries like hauliers that have an O license. They can't just liquidate or go into admin and start again, or care companies. CVAs, a lot of them fail. You know, they get pushed as a solution where perhaps it's not the right solution, because you can be in a CVA for 3 years, basically just paying debt back for 3 years, you're not making any money, and then something happens out of the director's control and they're at square one again.
And they all go back to where they were.
Yeah. So then when you're looking at closure, like admin's really good. I think from a PR point of view, administration's better because it's seen as a rescue process, isn't it? And it's designed when you've got real serious creditor pressure. Admin's quick. You know, you can file a document at court, the business is in admin, and when you're in admin, you've got protection. A lot of people will go down the pre-pack admin route, which I'm sure you're familiar about. And there's a few steps that need to be done before you actually go into admin. You get the business valued by an agent. Then the agent will do a marketing period. And this is the bit that everybody is scared of, okay? Because it's the bit that you believe that your business is going to get bought from under your nose, okay? But in many cases, most people will not buy a business on 5 days due diligence. Okay?
Apart from me.
Yeah, apart from you, if you're a telco, you're in trouble.
20 times we've done it, but it's not always 5 days, but yeah, I get that.
But a lot of people, especially when it's director-led, and the director's needed for operations, you know. So there's a marketing period, then a third-party evaluator needs to come in and basically sign off that the deal stacks up and it's fair to creditors.
Yeah, it's fair value, effectively.
You go into admin, the first job of the administrator is to sell it to a connected party. And like in scenarios, you can get terms to buy it on. It's not like you're going to have to pay for it all on day one. So that's administration. You generally transfer all the staff over with admin. What's different between admin and liquidation is how it comes about. In admin, you do it, then you tell the creditors. Other than the charge holder will need notification that you're going to go into admin. Whereas liquidation is, you sign your liquidation notices and you tell everybody up front. You're basically saying, John, I'm going into liquidation on this date. And you're essentially inviting the creditors, if they want to, they can appoint their own insolvency practitioner.
Yeah.
But they're both means to the same end. The company's closed, the unsecured debts die in the administration or the liquidation. Even in liquidation, you can still buy the assets back. The key thing is you've got to have an agent. You've got to have an agent that's going to independently value these assets. Because let's say you sell your business assets before you appoint a liquidator. You're going to get a lot of scrutiny, but if you do it right, you can do that. But the first thing that the insolvency practitioner is going to do when they get appointed is going, well, where have these assets have gone sideways? What have you paid for them? And you produce a report and say, well, that's what an agent believes they're worth in situ, and I've paid that, and it stops you getting criticised.
Yeah, about getting the right advice at the right time to work out what's right. We've done pre-liquidation deals where we've effectively bought it just because it was right for the process. It just depends, I guess, on the structure, but liquidation feels like it is dead.
Yeah, it's a full stop, isn't it?
Yeah, it just goes. And for people that don't know, like, what happens to the debt in that process then?
If it's unsecured, we're not personally guaranteed, it gets written off. And the idea of the insolvency practitioner is to try and recover some funds, whether it from assets, from preference payments, from directors' loan accounts, with an idea of paying out a dividend to creditors. But the reality is, a debenture holder may get something, HMRC may get something, they are a preference creditor. The chances of anything filtering down to unsecured creditors in most cases is very limited.
Yeah, we've got 6,500 customers. We have customers that go into a process, and I think
that you don't even fill out the form, do you? It's just,
I don't know. Sometimes we do. Sometimes we'll fill the form in. If it's a big customer, or if they owe a lot of money, I'll fill the form in. If they owe us 100 quid, it isn't worth the time. I think this week we had a check come through for like 7p.
Yeah.
And it was like, can't pay a check in, so I can't even cash the 7p. But like the time it will take to deal with that wasn't worth it. And I think you were kind of going back to your journey. You had that big creditor that kind of you lost right at the start 10 years ago. Did you ever see that recovery?
They've just vanished.
You're so far down the chain as an unsecured creditor. Like even secured creditors these days, I don't necessarily think.
No.
Well, HMRC obviously are now a preference, so they come out above everyone else, which changed fairly recently, wasn't it? The last couple of years, I think. So if you're in that position where one of your customers has gone under, it's kind of not worth facing.
You've got to have a real tight credit risk strategy, especially in certain sectors. Construction's a big one, isn't it? But it's just a hard one to call.
Yeah, mental health, huge, obviously at the moment. Do you see directors really struggling?
Yeah, and this is where I'll go on record and saying there is nobody like us out there, not one company, because we'll give anyone some time, and our job is to try and really help them, support them. You know? And the fact that I've been through this before, I'm not talking to them from an ivory tower. Like I've really been there, and I suffered with it. When this were going on, I thought my world were imploding, and we take calls day and night, and we take calls where we don't make it. We take loads of calls where we don't make any money, but it's that butterfly effect. Like you'll get a good experience off us, and if anything happens to a colleague, or the amount of referral work that we get every single day, our inboxes have got people who want help, and it's really tough for them because you don't have anyone to talk to either. No. Bottle it up. I didn't want to tell anyone. It was like because I felt a failure.
Well, it's like it's admitting failure, but you don't want to speak to your missus because you don't want to stress her out. And the amount of times I see a business failure kind of coupled with a divorce. I'd love to know what the stats were on how many divorces happen post the liquidation.
I know more of them happen if you've took a load of personal guarantees on. Because that's the worst thing.
It just rips the family apart overnight. So it's not just you losing your income, your job, your business. Like potentially you're losing the house, the family.
Kids, mate. It's so it's never lost on me how important a job this is, and that is. Like I get a lot of satisfaction, that we really, really help people, and there are stories that like we have people. I mean, you go and check our Trustpilot. We have people on the edge, literally, and I touched on it earlier. I know people who have made the ultimate sacrifice with stuff like this, and it's fucking heartbreaking. You know what I mean? It's like with kids, leaving kids, and nothing's that bad, you know what I mean?
No. But loneliness in general in the business world's rife. Like as a small business, like who do you speak to? Like even if times are good, who do you speak to? Because you can't go down the pub because it's, you've got a problem with a staff member. You can't go and speak to someone over a pint because if they've not been there before, I
find it very hard to make friends in business, and you know what? Because most people are full of shit.
Yeah,
I've worked on my own since I was 23, 24. I can count. I wouldn't fill two hands up with people that I've met in business that have done what they've said they're going to do. Loads of them talk a good game, and when it comes to the crunch, they don't quite measure up. And that has been my experience. So when I find someone who is straight and like, I try and stick to them. You know what I mean?
Keep them close.
And they're my friends that. I've got friends who I met in business all that time ago, and we're still good friends today, but I think it's a lot of sharks as well.
Yeah. It just feels like everyone will cover their own arse before they'll help sometimes. And I don't know if that's a cultural thing in the UK or what, but like I'm trying to bring more and more kind of small businesses together and just have those conversations. And if anyone ever is struggling, like I'll always have a conversation. I've been through the insolvency world on both sides, the acquisition and also putting them under. So maybe I can give quite a unique view on, and I can't advise, I can't sit there and go, do this, but at least you can have a sensible conversation and it might just help or point people in the right direction.
I think sharing your own experience is so powerful.
Yeah.
Because you've been there, and that connects you with people,
Yeah. Cool. So we're coming to the end of the interview today. We normally do a quick fire segment. I just throw 5-6 questions at you and see what you come up with. Don't have to answer them for long, but biggest business lesson
put yourself out there. Yeah, be authentic. Like, if you're good at what you do and you're you, right, that will come across with people. And that will also put some people off. I'm not everyone's cup of tea. But if I was, I'd be a mug, you know? So just be you. Some people will really like that.
Amazing. Best decision you've ever made in business?
It's a tough question. Do you know, probably the best decision, I value my peace more than I value my profit. So I want to be, when I go home, I want to be at home. I don't always get this right, but I could do a lot more than I could do. I could chase a lot more than I can, but it would take my peace, and that would take my ability to be a dad. And so putting my peace above anything else.
Do you think that's taken years to work that out?
Absolutely, yeah. And really messing it up for many years, you know.
Yeah.
But yeah, my peace.
Cool. And then the counter onto that, is there a worse decision or a bad decision you look back on and think, got that wrong?
We could spend another hour talking about that. I've been in some business relationships that I've perhaps, they wasn't well thought out, you know, and I think it's really important that at the start of a business, if there's more than one person, your roles, responsibilities and expectations are really mapped out, because if they're not, it can be really difficult in the end.
Okay. Really good advice, that. Anything you'd change over your career?
I wish I'd have played for Preston. No, listen, I've had a lot of highs and a lot of lows, but there is a saying, and it says, because obviously my insolvency was really painful, but it was a catalyst to doing what I'm doing. And it's that saying that in every adversity is the seed of an equal or greater benefit, and I love that saying. So, you know, I think this is where I'm meant to be in life, so yeah. I wouldn't change it.
Cool. And then looking back to 20-year-old Chris, if you could go and tell him one piece of advice, what would you say?
20-year-old Chris was a lot different to who I am today. I think I'd just say behave, mate. Fucking calm down and behave.
But as you said earlier, that journey's got you to where you are today.
I think, you know, like, I'd just say things are going to be all right. Like, just do what you say you're going to do. And I see people like really getting caught up on what I'm going to do, what's my career path, and like, I'm really grateful where I am today. And I think if I'd have just said at 20, just say you're going to be all right.
Yeah.
I spent a lot of years panicking, fearful, doing things that perhaps I'm not so proud of today, you know, and it was all stemmed from fear. So things are going to be okay, kid. That's what I'd say.
Awesome. Final one. Best book you've ever read?
I saw that, and there are lots of different books, but I really like reading the Bible now. You know, I think that there's a book called the Book of Proverbs, and this is written in the Old Testament, and they're essentially sayings of wisdom. And I'm a guy I've read hundreds of personal development books, and you read this that was written centuries ago, and they're as clear and you know applicable today as when they wrote. So that's why I really quite enjoy reading those in the morning.
What a way to finish. Super. Thank you for coming in, Chris.
Top man. Cheers,
Right.
John.
Cheers.